Okay, everybody. Today I'm going to be going over what I saw in price and making it as clear as possible for everyone to understand, as well as implementing some of the concepts from episode 6 that I've been relearning, or things I thought I understood but haven't really understood. So I'm going to work on that. One of the things ICT also talked about as well, and I noticed I've been doing is a lot of the times I realize that I say, "Oh, this is too risky," and I'm skipping moves just because um, we're at like equilibrium or something like that, and I'll be like, oh yeah, this is very back and forth, this is very risky. In fact, I did that last Thursday and Friday, I believe, for both studies, because I said, okay, we should be a spectator here. What he said then is, instead of doing that, saying, oh, we can't trade, to go ahead and go into the lowest time frame and then trade with a lot lower risk. Obviously, still being a choice, regardless of if you want to do that or not. But I digress. Good point to mention in a video. Good point to mention in the start of video. Something I picked up on, which I didn't mention in the last episode or diary, whatever I'm studying. So, anyways, here, the very first thing is we want to look at where we are in this daily range, which is very clear. So we're going to go ahead and mark from this high to this low in the current leg that we're in. Here's equilibrium right below this fair value gap that I have outlined here. Okay, trades below. Here's Thursday. Don't worry about this candle to the far right. Thursday, trades below that. Okay, this was FOMC, so lots of volatility. Trades below that. Doesn't trade above that high. Funny enough, though, FOMC traded or showed a willingness of wanting to trade into the fair value gap above right there. Okay, so what we have here looks a little familiar, and I don't know. Okay, I don't know if I'm right, but look, this low form. Okay, boom. This low form, low violated. Okay, it's two levels of sell side liquidity right here. Price trading up, highest it can go, or the highest, like what ICT says. If you have two fair value gaps, it will most likely or can trade to the second highest one. Did it here. We have these multiple levels of sell side liquidity. All this untapped sell side liquidity. What would I like to see ideally? That's just an idea. Ideally, I would like to see more volume. We've seen this fair value gap be tapped over and over. I'd like to see more volume before seeing a move for that sell side liquidity. But where are we at right now? Well, currently, we're trading into a premium within this leg. Okay, and if you look at the larger leg, we're in a discount. So, show you here. Okay, this is, and from this high to this low, we're below equilibrium. When you go from discount to premium, we still have objectives up here. Okay, we have multiple objectives on the buy side, and we're gonna look at what today did now. So, the very first thing, here's yesterday's low, here's yesterday's high. Later on in the day is when we have that low taken out, that we see, that sell side liquidity taken. But the first move of the day is rebalancing, or repainting, if you will, the inefficiency. So we're going to go ahead now. I'm going to drop to the 15-minute. Okay. On the right side, here we are on the 15-minute. Also, take this off. I don't necessarily resonate with that setup or idea I created here. So, very first thing, prior to 8:30, we had this high created, so one of the London highs, and we had this low created. This low happens prior to New York. So just have this in mind. Okay, now it's good to mention that today we had a few news drivers, one of which was at 8:30. We had these very relative equal lows. Okay, and there's 8:30. Just this kind of consolidation or accumulation of orders. Okay, unemployment claims. And then at 10 a.m., we have a medium impact news driver. So let's see what happened at 10 a.m. 10 a.m., boom. It's liquidity. And it rebalances. I don't know if that news driver is a reason for it rebalancing. I mean, 10:15, we have this kind of like indecisive candle here almost, but it creates this low. All right, and I don't know why it went to this specific high here. I guess maybe looks like it's maybe high from another day. I don't know. I don't exactly know why it traded here, besides that it was rebalancing that very inefficient volatile movement on the buy side. Okay, so the very first thing, or sorry, not the very first thing, we have this level of sell side, this level of sell side, this level of buy side, this level of buy side, this short-term low, level of sell side, before creates the low of the day, and then rallies off and consolidates. Now we're going to do our top-down analysis, start looking for setups. I'm going to go over the two that I outlined so we can keep this brief. So there's that low at 8 a.m. prior to 8:30. Okay, 9 o'clock violates it. We have this high created, short-term high. Okay, and granted that from here, this is currently in a discount. Okay, or back here, sorry, would have been a discount because this is below that yellow square, that fair value gap. So it's from a discount to a premium is what we're seeing. We're seeing this happen because when we get into this fair value gap, now I know we're back in a premium because the equilibrium in the current price leg is right below this on the right side here. So either way, we see a move to a premium. Now we want to buy in a discount, moving to a premium, but this is This is very close to equilibrium. So we catch the move. Okay, what we notice here, we have these very relevant buy-side objectives being yesterday's very volatile move, expecting a rebalance on that. We have a run, but we have a swing high, a run above that high. Okay, creates an idea, and then a fair value gap. Now we're gonna go over that idea further here in a minute, but even this setup, okay, this setup is a good in my opinion because it's easily noticed on the 5-minute. Now I'm gonna go over this now because it doesn't really make sense in those lower time frames, but here we go. Okay, this is after, sorry, so let me look at this. So actually this is trash. Sorry, let me change my thought here. The reason why it's trash is because of the time frame. This is all happening 12:20. This is not a time we'd be trading. Now it just so happens that today I have them all above the chart, which is the reason I didn't notice that. So I guess it's really just this one setup. So we'll look at this. All right, we'll go to a lower time frame. There's really nothing like that different, so I'm just gonna go straight to the 1 minute. If you want to go analyze your own price action, you can, but that's what I noticed. Okay, is that there wasn't really anything like that really stood out on those when I initially looked at this. So we just look at what price is doing. We have this low created here, higher low. Okay, again, this low here is in a discount. Okay, right here, discount. So we see price start to move into a premium, and it creates this high. Okay, just a swing high. It's just a high that forms. So we pay attention to it. I paid attention to it. Trades below these relative equal lows or level of sell-side liquidity. Anytime a significant move higher is expected, we expect some form of a stop rate. We have it right there. Trades above this old high. Displacement. This massive move upwards, or not massive, but we have this displacement upwards. Knowing that it's going to rebalance, or expecting that it's going to rebalance that displacement or volatility from yesterday, this aligns with that idea. So here we go. Boom. Multiple chances for entry right here, expecting it to of course go down to even here where there's also a gap in fair value, expecting it to go to any of these lower as well. Okay, regardless, then we have this leg upwards. If I would have participated in this leg, we'll just mark it from here to here. Oh, I don't know why I did that. So we'll do it from the top to here. Boom. 80. So that would take 1 hour and 30 minutes to get to that high. 38 pips. Sorry, delete something I didn't want to delete. There we go. I don't know why this house formed exactly here. It did trade above, like this is the fair value gap from a previous leg. So I probably wouldn't have held this to here unless I was able to find a better reasoning behind that, which I didn't. Okay, here we go. This level is sell-side liquidity. We're moving in towards lunch. Boom. This level taken out here. Retracement, and so on. Biggest setup here that I noticed was this one in the AM session. Now we're going to do a few other things here. But we're going to go into the, 15-minute time frame. So all I want to do in the 15-minute time frame is just focus on the lows of the candles at 9:30, based on what he said. So here we go, 8:45. So 9:30 is when we have that displacement move. Okay. So here you go, 9:30 on the 15-minute. Okay, we see this. Let's move higher at 9:30. Okay, here we go, 9:30. So this price leg here. So we just see higher lows. And then, interestingly enough, we have this resistance here. Let's go to a 5-minute at 9:30. And I'm just looking at intermarket relationships. Okay. Here we go. Higher low. So honestly, based on what I'm looking at now, everything seems like it's in correlation. There we go. Higher lows. Oh, I'm looking at the wrong thing. Okay. So 9:30. 30. This low, this lower low. Did we have that on the other time frames? Sorry, I want to make sure. Let's see, 9:30. Higher lows on the Dow. Higher lows on the Dow. Just looked at the S&P. So higher lows on the Dow and Nas. Sorry, I know I'm going through this. I keep saying sorry, I don't know why. I'm not apologetic. Yes. I'm happy to record this. Okay. So, yeah. So, on the... I guess I don't really understand fully, but on the S&P, we have these lower lows created. So we see the S&P shows weakness compared to the Dow and the Nas, which create higher highs. So what that essentially that indicates to us that there's weakness in, first of all, the E-mini, but also it's a macro. Something is preventing price from going higher, like the Dow and the Nas are allowed to. I mean, that's my understanding of it. It's a little confusing. I don't fully grasp and understand everything yet, and it's okay. I have 6 months to be doing this, or I guess it's about 5 months now before I even start trading. What I'm really going through is a process of grasping everything, back testing it, and I'm happy with that progress. So the very last thing here, because this is a little more long-winded than I want it to be. It's probably why I feel apologetic. I feel apologetic towards myself. Look at me, 11:39. Let's leave. 11:39, man. Pretty much every time I record these videos, it's like 11:39. Ah, I wish I would have seen this. See, I had my phone on Do Not Disturb all day. I haven't been looking at the Twitter at all. So, I really don't know. Live stream startup. Opening gap. Look at all these people who are getting funded from ICT. To be honest, look, I'm gonna give myself a break. Look, I can go through the Twitter. He's making different call outs. This was what I did based on my analysis. He's calling out different levels, and I should be following that with him, but I didn't today, and that's okay. You know, progress, not perfection. Working on it. I'll get better. Need to start staying, or need to start following his Twitter more heavily. Need to implement concepts and get through a video every day. As long as I'm doing that, I'm happy. Wow, this is only 15 minutes. I thought it was way longer. But yeah, as long as I'm doing that, I'm happy. So I'm gonna close it off at that. And yeah, thanks for watching. Bye bye.